Yo, what's going on, everybody? It is Thursday, March 2nd. Folks, I cannot even tell you how insane things are right now, and I'm just saying this in a positive way. And I know that, the market's been frustrating recently, and it's been tough, and it's been difficult. And a lot of you are getting disappointed and you're losing confidence. And I keep trying to tell you, I use that old navigation analogy of the sailor out on the open sea. Like, you have to go by your instruments, or the pilot flying in bad weather, you have to go by your instruments. It's very hard if you're going to make a judgment off of your view, something visual. You can get confused. You can go in the wrong direction. And most of you are prone to that. I hate to say this, but most of you are prone to that. But the numbers do not lie. And I'm not going to give out specific numbers, because this time I really don't think it's fair for people who are paying me for my subscription, and I'm giving out different numbers, specific numbers actually, with charts and graphs and showing them daily. It's not just like, I'm sending these things out through the course of the day. But I will say this. I think it's fair to say that what I am seeing now in the numbers is an extraordinary acceleration in the fiscal flows. And again, I've been prepping you for this for a long time. I've been talking about how the rate increases are going to result in a major fiscal expansion. It's going to take some time, because I also explained that the first reaction on the part of the monetarist zombies, which they dominate the world of finance, they dominate the world of academics, they dominate the world of the media. It's always going to be viewed through the lens of that monetarism that they believe in, which, by the way, is not even a true understanding of monetarism. It's kind of like a mythology. It's kind of like a cult that they believe in. So the first reaction, and I did admit that the very first reaction when the Fed changed course last year, there is a discounting effect on financial assets. But then, I've been telling you guys to prep for an inflection point. And the inflection point was when the negative impact of rate increases falls below the positive impact of the fiscal flows, those interest income transfers into the economy. And I kept saying we were at the very, I told you that the inflection point was in October. And it's funny now, because a lot of comments that I see online, people are like, it looks like things might have turned around in October. They're not even sure why. They're talking about, we had that guy Mike Wilson, who's the super bear on Morgan Stanley. He said it must have been back in October when when market participants started thinking that the Fed was going to stop raising interest rates. But it had nothing to do with that. I mean, it is very clear, and I've been sending out charts and showing, and I chart this data, and I keep proprietary databases, and which only my subscribers get to see. But you could see the inflection point. It is absolutely, unequivocal. You could see that inflection point when the fiscal contraction of 2022 ended, and we were back again into a fiscal expansion. And I've been telling you guys about this. I've been saying this is happening. But what has been happening recently has been like a moonshot acceleration in these fiscal flows. Now, I understand yesterday was March 1st, and on March 1st we get the normal first of the month big payment days, that's Medicare, Medicaid, military pay, veterans benefits, There maybe was even a Social Security payment in there. I didn't look, but we had a very, very big day. It was a 105 billion flow day. But what I'm trying to impress upon you is that the acceleration now, I mean, it almost is starting to look like 2020 when they started to enact the pandemic stimulus. It is really starting to look that way now. And I see this, well, two things. Number one, I see it as a very bullish factor. As it's interesting that foreign stock markets like the FTSE and the CAC 40, the French stock market, the DAX is very close to an all-time record high. It's going to be hitting one soon. Remember, that was the country most affected, supposedly, by the Russian oil and gas situation. Those markets are recovering. The dollar is weakening. As I said, it was going to weaken because of the expansion in the fiscal flows. In fact, I said, keep your eye on the dollar because it's like a canary in the coal mine. It will tell you if we're seeing, an extraordinary or a meaningful expansion in the fiscal flows. The charts are unbelievable. I mean, if you see the charts right now, it is very similar in my mind to what we saw during the response to the pandemic in 2020. If I'm going to say there's a negative factor associated with this, I will say that it is going to be the Fed response because they are not going to there's not going to be a slowdown in the economy. As a matter of fact, and I said early on, I said before even 2023 started, I said there is not going to be a recession. There was universal calls for a recession at that time, but I will continue to qualify and say that, and remember that I'm saying this too. I don't think it's going to happen, but remember that I'm saying that in June we got to deal with the debt ceiling, and if we go into kind of like an austerity mode, then in a lot of the things that I'm talking about now, which are very, very bullish, I mean, that's going to change the dynamic. That's going to change the landscape. That's going to change the outlook. I don't think that's going to happen. I've been saying this. I do think that they will, in the 11th hour, come up with some kind of an agreement. Maybe Biden throwing in, he's talking about some tax increases now or something like that. I don't know. But I'm hopeful that they will come up with an agreement. Because we are poised right now. I mean, this market, if we did not have the debt ceiling hanging out there in an unresolved fashion as it is now, and with the politics of the situation, which is very, very brinkmanship and standoffish and confrontational, which is unfortunate. I mean, this thing is looking like, I mean, you cannot believe it. I mean, if you see the number, a guy just sent me back, he said, wow. Like, I sent this text out and I said, take a look at what's going on right now. He's like, well, I cannot believe it. And it's true. And the thing that I've been saying all along is that a lot of these flows are really just getting started because, like, we're not even 1 year into the Fed rate hikes. When did they start? They started like March 16th of last year or March 20th or something. So we're not even 1 year into the Fed rate hikes, which means that, and this is something that I've repeated often, that a lot of securities, they still need to mature, and new ones are going to get issued that are going to have a higher coupon. And so we keep ratcheting up the level of fiscal support to the economy. I mean, people, it's funny because they fret and they sit there wringing their hands and they make these super bearish comments online about, oh, the Fed's going to raise, they're going to stay higher than longer, and they're going to go maybe now to 6%. I think even Jamie Dimon's saying 6%. 6% on 31 trillion in debt outstanding, and it's not debt, it's just securities held, by the non-government. That's almost a 2 trillion annual. That's 2 trillion annual additional income transfers to the economy on top of the regular annual government spending, which is like just below 7 trillion. So, I mean, you're talking about, we're getting a boost that's going to go up to 9 trillion. Now, that's going to keep inflation elevated. I'm hopeful that a lot of these pandemic issues are going to continue to get resolved. It's happening slowly, but it's starting to get resolved. We still have the sanctions in place, which are unfortunate because they're just making things worse. But the worst of the situation, without question, the worst of the situation is the fact that the Fed's supposed remedy for all this, raising interest rates, is just continuing to lift the general price level, and it doesn't really give a chance for inflation to go down. I mean, we're kind of like going a full Volcker scenario. And so, I mean, I don't see that particularly as a negative thing, as long as output continues to rise. Don't forget, in the pandemic, we had a near global shutdown in total output. I mean, so, and for these people who criticize MMT, like I did a thing the other day on this idiot Gunlach, MMT absolutely, unequivocally, correctly predicted what was going to happen to prices when you shut down production and you increase fiscal by a record amount. I mean, MMT explains that to a T. But these people with their straw man arguments, I mean, to me, they just look like complete morons and idiots and fools. But this is kind of like mainstream. It's kind of like the orthodoxy. It's kind of like what these people who think they're very smart talk about, but they're not very smart. They're not very smart. They don't see what's going on. So if you want to take a look at these charts, at these numbers, because they're really, I mean, it'll blow your mind. You got to sign up. I don't understand why you guys are not signing up for the report. It's the only thing out there like this. And it keeps you out of trouble. I mean, this is your GPS. These are your instruments. This is what guides you through these times. I mean, if you didn't have this, you'd be selling every day and then buying it back and then selling it the next day and then buying it back and selling it and getting nowhere. And listening to all your friends about how things are just so terrible. Look, I understand there's sectors in the economy that are not doing that well. But my job here on this channel is to try to help you make money as investors. I'm not here to say, this industry is particularly bad, and so that means the whole economy is bad. Some things are doing better than others. But I look at the macro picture. And eventually, if conditions are improving in that macro sense, in the first derivative, in the things I talk about, which I term the first derivative, then we are going to be okay. And you got to put your confidence in the instruments. That's all I have to say for today. Go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. Do it now. Bye.